Hi, folks. Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory. Thought we'd come to you with a brief market update on Jackson Hole Friday. So the Fed chairman gave a much anticipated speech out in Jackson Hole earlier this morning, and it's moved markets a little bit today. I'd note that right now we're right at about 4,100 on the S&P. We started the week at 4,170. So despite the fact that we had a relatively large sell-off on Monday and then relatively large rally on Wednesday and Thursday, we're ending the week not really that much changed versus where we started. So I like to remind people that, if you're going to follow volatility, do it on the absolute level, not on the percentage change in any given day. You'll make yourself a happier person as a result. Talk a little bit about what the chairman said, which was not much. It's actually probably the shortest speech on record by a Fed chairman. It was about 8 minutes long. And in it, basically, the Fed said that everybody should calm down in the sense that we did see some mild softening of the economic data in July in terms of inflation starting to turn around. But the Fed is convinced that they are going to need to see a lot more of that before they are convinced that they need to turn around and start to lower interest rates or slow the pace of interest rate rising. So bets are still about 50-50 for whether or not they raise interest rates by 50 or 75 basis points in September. And I think that the chairman is basically expressing the view of, it's nice to start to see things headed in the right direction as far as inflation goes. But we are still a long way from the goal of 2% inflation. And until we get there or start to get closer to there, then you should expect the Fed to continue to tighten up the screws on the economy. And this is, by the way, echoes a lot of what I think we've said over the past couple of months, which is, look, longer term, inflation is very damaging to the economy. It's damaging to everyone's portfolios. It's damaging to your retirement plans. It's the beast that we need to kill, if you will. And in order to kill it, we're going to have to see a little bit of demand weakness. The Fed is going to have to make everybody slightly less happy. We're going to have to see unemployment go up a little bit. It's going to have to be harder to sell a house, harder to sell a car, all of those things. And until we start to see that happen, the Fed's not going to be convinced that the inflation beast has been tamed. The other point that I would just make about the Fed's speech was that Powell was very careful to say that the decision on raising interest rates in September will be based on the data. And I think that that's important to note that while the Fed is telling us that until inflation is gone, you shouldn't expect us to start to reverse course, and we're a very long way from inflation being gone, they are also saying that they will be data dependent in their decision making. So it's worth noting that they haven't laid out a path without the idea that they would check that path from time to time. It's more just the idea that, seeing one print on inflation where things cooled off slightly is not going to be enough to convince the Fed that we're out of the woods with respect to the whole inflation picture. In terms of a little bit of a good news on the Friday, much overlooked, we saw consumer sentiment come out, which actually improved fairly remarkably over the prior month. And I think in particular, the expectation for future inflation numbers came down quite a bit, which is good to see. If we're going to get lower inflation, the first thing that we need to do is have people expect that there will be lower inflation. So it's nice to see that data trending in the right direction. As always, if you have any questions, please reach out to myself or to your advisor. I look forward to talking to you again soon, and I hope you have a great weekend.
Thank you for tuning in. And if you're enjoying this content, please don't forget to subscribe and click the bell so you can keep up to date with everything new at RFG. If you want to learn more about who we are and what we do, please visit our website at rfgadvisory.com.